Welcome, everybody, to our introduction to RAC. Happy Tuesday. I'm so happy you all chose to join this webinar this week. Look, coming from an audit perspective and background, I know August is a trying time of the year. We're tired. But the good news is we are almost at that point where we can see the summer holidays in the distance over there. Just before I get stuck in, I just want to thank our ever wonderful Mariandre with her quick fingers for the Q&A. Please feel free to pop in a Q&A. We will address it. If we cannot address it in the live session, we will revert back to you. All right, guys, I'm going to turn my camera off for this and let's get stuck in. All right, guys, so today we're basically going to cover navigating your RAC workflow, okay? So, all right, what does RAC stand for? No, it does not stand for run away and cry, okay? It also doesn't mean rapidly approaching chaos, although I think we all feel audits are that, okay? However, what it does stand for is risk assessment per component, okay? Now, a few things to note with our workflows and everything. Sequence is really important, not only just because RAC wants it that way, but because it's kind of in accordance with your standards, all right? We do not roll forward any RAC template documents. You'll note throughout the RAC, there are roll forward cells, so information pertinent to next year will be rolled forward. Your working papers that you choose to import that might be of relevance next year, you can choose to roll that forward. However, Draftworx handles all its RAC template documents roll forward, okay? Your working papers are seen as a guideline. Always use your professional judgment in deciding what to complete and the level of detail required to be completed, okay? Not applicable is a very valid answer when based on your professional judgment. Please note, if you are looking for any firm quality control manuals, we have partnered with ProBeta and you can contact us at sales@draftworx.com should you need any additional information in that respect. Now, preempting a question here, less complex entities, right? We did mention this at the beginning of the year. So for those that haven't seen it or heard about it, IRBA hasn't taken a decision not to implement the LCE standard in SA just yet, okay? This will make the development of the working papers and methodologies quite a bit difficult for us, as we don't really have a local resource to draw on to get input on the required changes and testing. However, we are going to gauge its implementation in the market and we'll make a decision on development from there. Alrighty, using Draftworx RAC working papers, so we kind of focus on a workflow. We like things to flow. You know, you don't want your audit to be a roller coaster flow. You want it to be a nice little casual drive through the game reserve type flow, okay? So how do we do that? We have our pre-engagement activities, okay? From there, we kind of establish our planning phases. What are we going to identify in terms of risks? How are we going to assess those risks we've identified? Then we head into your execution, okay? You obviously need to treat those risks, do the actual audit work. And finally, what's our main objective of an audit? To give an audit report. So we head on to reporting/finalization. Throughout the process, there are some key decision documents to be considered, okay? 1, client acceptance. Why would that be a key decision document? Well, are we going to accept the engagement, decline the engagement, withdraw from the engagement? This all kind of tells you the flow of your engagement you're going to follow. Engagement letters, you can use your own. We do, however, have a template that you can cater if you would like to use that one. Of course, we get to identifying the audit sections. Why would that be important? Well, am I going to test every single line item in the financials, or am I going to identify what is required to be audited? Then we get to risk identification and sign-off, okay? So here, throughout the whole planning process, we're identifying risks, we're assessing the risks, and then we evaluating a plan from there. And of course, we get to our planning sign-off, meaning gung-ho, go do your audit work, and then hopefully get to a conclusion on your audit. Okay. How to avoid RAF. What is RAF, you may ask? Well, RAF is resting auditor's face. Yes, this is what I used to look like at 3 in the morning after facing a grueling audit. So how do I avoid this? That is where Draftworx comes and saves the day, hopefully. Right. Now, let's dive into your auditing. Okay. Few key things to remember when using Draftworx audit papers. Okay. Our audit papers are determined on one or two key factors. One, I need a trial balance. Okay. If I do not have a trial balance that has been linked or mapped to how the financial statements look like, it's not going to feed into my working papers. Okay. This is a very crucial step because a lot of these figures determine the nature of your working papers that you're looking at. Okay. Next, what else do I need when doing an audit? Well, hopefully I'm not a solo auditor doing all the work, planning, execution, reviewing, and everything. Should hopefully have a team. How can I set them up? In client setup, you can go and do a team setup. Okay. Now there's two ways to pull in your team. Okay. You can enter them manually. So I can go and enter Mariandre, and she is going to be my audit manager. And if I would like to, I can include her email address. Okay. I'm not going to for now. Okay. Including the email address is just basically enabling me to set up where I can send electronic review notifications to my team members when an action is implemented. Meaning, if I go and assign Marie-Andre a certain section or certain working papers, and we are located in different regions, she would be able to get an email notification saying I have done so. I do not have to activate this. I can choose to use it if I would like to. Okay. Alternatively, I have quite a big audit team, and I can go and I can import my audit team. When I do, I can select the respective team members. Okay, I'm going to choose Nicole and Ryan, and basically I can now go and build up my team members. I can go and say, well, let's make Nicole the trainee, okay, and Ryan can be my partner. Again, I can go and indicate how I would like notifications. Let's not bother them today with all my nonsense. They will get it either way. Okay, so key is set up your team. Why is this crucial? It enables me to communicate with my team, meaning I can send them review notes without having to send them an email with manual notes written in it. Okay. Right, now we get into the thick of it. Our working papers. So you'll see they are broken up into respective sections. You have finalization. Why is that important? Well, that's going to give me my conclusion and what my audit report should be. Okay. Engagement and team setup. Here we're looking at your pre-engagement activities, right? You'll see a whole little section here. This is a very key start to setting your flow of your audit. Okay. We get to planning and risk identification, as well as system notes, those pesky system walkthroughs. Okay. 11 and 12 and 13 are crucial in identifying potential risks of material misstatements. Okay. Together, whatever I have identified, we then look at our risk assessment per components. Here, I can have a look at a risk register. From the risk register, I can go and assess those risks. And this will then lead me to my audit plan. Audit plan, meaning your nature, your timing, your extent of your audit. Okay. Then, of course, we get to 18 and 19, other planning documents. So this is where we've taken the executive decision. We're happy to sign off our planning and move forward into execution. Okay. This is also where, in the event I've identified the need to revise materiality, I can go and use my revised materiality. Section 20 and 29 are for your special risk items. And as you'll see, journals is there. Why? Because journals is always that lovely special risk, always a significant risk consideration that we need to be cognizant of. However, Nicole, where are the rest of your audit programs? Surely I should see something for property, plant, and equipment, or revenue, or related parties, and things like that. I cannot see that until I do my planning. Okay, right. Now, let's get stuck into some planning. Okay, your engagement and team setup. The very first document you see is engagement, acceptance, and continuance. If I follow that document, all right, you'll see it sets the tone for the rest of my working papers. Right, so we're going to look at a few colors. I have a light yellow, a light blue. Later on, we'll see some red. Later on, we'll see some dark blue cells. So when I come across those colors, I'll explain their importance and their assistance to you, the user. First one I get is yellow. Okay, so yellow is kind of just a slight warning in a sense of, please complete me. I might affect other areas of your audit. Okay, so it's looking for a compulsory answer. So is this engagement a new engagement or a continuing engagement? That's the very first question we have. Okay, if I drop down or select the cell, you'll see there's a drop down. Are we looking at a new or a continuing engagement? Okay, for anyone that is using Draftworx for the first time, and this audit is the first time they are doing it on Draftworx, that doesn't necessarily indicate it's a new engagement. You could have been doing the audit for years, so you can indicate continuing. The new engagement, if I select it, Draftworx will actually prompt me to go and complete a certain working paper to support my response. Okay, in this sense, 1001 has been indicated. Let's have a look at 1001. Now, when you have a new engagement, what's the first key thing you have to consider? Well, what was the predecessor auditor's conclusions? And we kind of go and review said predecessor auditor. Why would this be important? Well, it's going to, again, set your tone for your audit. Now, whenever faced with a question or an action, you'll see light blue cells. All I need to do is go and indicate my response in the cell addressing said field or question that I'm faced with. Okay, so I go through this whole document, and again, I see yellow cells prompting me for a response. What response is really important in a new engagement consideration? Well, based on the evidence above that you've got and highlighted and indicated, are we looking at a high-risk audit, a moderate risk audit, or a low-risk audit? Already here, I'm beginning to set the tone of where I feel this audit is going to go. And of course, in my opinion, do I choose to accept the engagement or decline the engagement based on said review? Right, let's switch this up just slightly. What happens, okay, if it wasn't a new engagement, but it's a continuing engagement? Okay, I'm going to go and indicate my response now. When I do, my little hyperlink does disappear from the working paper. However, in my working papers, 1001 is still there. It's showing that it's an active working paper. But let's go and have a look at 1001 and see what Draftworx has indicated to me now. Great. New engagement. I've told it it's a continuing engagement. Therefore, this document is not applicable. NA. Fairly standard response. What can I do from this point? Well, I can come to here where I've got shortcuts and I can indicate that the document is not applicable. Right. Now, when I indicate a working paper or a document is not applicable, in some instances, like mine, you'll see 1001 has now hidden from my view. If that is happening to you, it's quite simple that in your electronic review, you've gone and you've indicated you would not like to view the not applicable working papers. So electronic review, I will be covering in a file. There's a few tips, tricks, and obviously just a few understandings on this. But in this instance, my electronic review, I have indicated that I would not like to see my not applicables. If I would like to see them, I just go and click on the I, and then, of course, it'll activate and be able to see all my not applicable documents. Okay. Righty. Sorry, just want to close that one. Okay. I can also, time saver, go and initial and date any response that I've indicated. Again, on the side, yeah, you have got shortcuts available to do so. So I can go and tell it, initial and date. I have indicated that response. Great. Now, when I indicate a working paper or a document is not applicable, if that is happening to you, it's quite simple that in your electronic review, you've gone and you've indicated you would not like to view the not applicable working papers. So electronic review, I have indicated that I would not like to see my not applicable. If I would like to see them, I just go and click on the I, and then, of course, it'll activate and be able to see all my not applicable documents. Okay. I'm going to go through each question. Obviously, in the auditing world, in the webinar world, we're going to skip a few of these. All right. However, please do complete them when you are doing an active engagement. Our next one that the working paper is kind of indicating to us should be completed is 1002, right? So let's go and open 1002. Now, 1002 is going to speak to our audit firm's independence. Why is this important? Well, are we as an audit firm independent and can be seen to be independent from the audit engagement client? Okay. Again, a whole lot of questions indicating I'm required to put an answer to. So, do I have financial interest in the client? Yes. Okay. Do I have any loans? No. All right. Have I got a close business relationship? Yes. Don't worry, I'm not going to complete the whole document. Just going to highlight a few key things so we can see how Draftworx makes us aware of a certain thing here or there. Right. Okay. If I've indicated that I say yes, i.e., I am indicating I have a potential threat to my independence here, I need to go and document the reason for the prohibition. Okay, so I need to go and say whatever reason. Okay, and then I need to document the actions that were taken to reduce that threat to an acceptable level. Okay, so action taken. Right. I am now going to leave some of these unanswered and a deviation still applicable, right? So as a clerk preparing this, I go through the whole document and I would assess our independence. I hereby certify that the firm is what? Are we in all respects independent? Are we not independent, but we have mitigated the fact? Or are we completely not independent with zero ability to resolve said independence threat? Okay, we go and we choose the right option, and then we indicate that we choose to accept, decline, or withdraw from the engagement. Going to accept our mini engagement today, and as the trainee, I'm going to go and set it as prepared, right? This will just give me a sign-off date, indicating I've taken responsibility for signing off this page and all the actions to said document. Just as a shortcut or a tip and a trick, we have minied the headings at the top here. If you open that grouping, it'll give you an idea of who the staff member was that initially prepared the document, when a manager reviewed, and when a partner reviewed. We will do a few manager and review sign-offs a little later. Just don't want to log in just yet to do that. But of course, my manager or my partner will log in, confirm what is written there, or indicate a note to me to address certain things. Okay. When you do complete certain working papers, you will see that we have automated the responses to those questions within the working paper here. 1005, another one that's indicating a response required. Right, now we're looking at the competencies and the independence evaluation of the engagement team. Over here, you'll notice a little tan block, okay? When you see that tan, it's just us kind of advising you to either take note of something or just a tip and a trick throughout the working papers, okay? So here, I can choose to go and select 1003. Okay, 1003 is your individual team members' independence. What is 1005 doing? We're evaluating the competency and the independence of said team members. Now, you'll notice I have three options here. Okay, I am able to manually input their names. However, because I'm going to fill in their independence certificates, I'm going to jump to that hyperlink on 1003. When I do, I'm going to go and add my team members. Here we'll add Cole, we'll add Ryan, and we'll add Marie-Andre for now. Okay. Please note in your content, you are able to activate up to 10 individual team members, right? Now, Nicole's going to go and evaluate her independence. Let's do it. Is she straightforward and honest? Let's say no, she's not. That's really sad. Objectivity. She's managed to maintain that. She's not really showing some good professional competence and due care. As we can see, she's just kind of phantom ticking over here. All right. Now, again, Draftworx has indicated to me I have a deviation, I am required to put in a comment. What is the reason for not being honest or straightforward? Okay, so again, we have to go provide said reason, document said actions to take that threat to an acceptable level. Again, I'm going to leave some unanswered, some deviations, so we can see the results a bit later. At the beginning of an audit, please remember, you do need to indicate or sign off that you were independent at that point. So Nicole will go and indicate that at the beginning of the audit, she saw herself as independent. At the finalization of the audit, she will need to reassess that again and, of course, sign and date that she was still independent, right? She'll go and mark it as prepared. When I do go and complete the independence certificates, you'll note that my names start pulling through automatically. I will then go and evaluate the competency of the team, right? At the beginning of the audit, at the end of the audit, we are assessing or evaluating their independence. Did we identify any threats? If we did, how did we safeguard it? What actions did we take? Of course, if you are utilizing any experts, you can also follow the same procedure, input their information, evaluate their competency, as well as their independence. Throughout all our working papers, there is always a main tab, i.e. your working paper, followed by a guidance sheet. Okay, what is the guidance sheet? Well, it's a little bit of a nugget of information, if you will. Okay, it'll give you an objective. It'll give you a link to a training video explaining this particular working paper, right? And then, of course, we have actions and the guidance related to the action. The even better part is we go and tell you which ISAs were addressed. So if anyone were to ever ask you, did you comply with ISA 200, section 14, 16, 18, and 19? Say, yes, I did. 1005. There we go. Cool. Happy days. All right. So please note, we always have a guidance sheet as well as a link to a video, but we do also have our incredible support team if there is ever anything you would like clarity on. Okay. Right, I go and I evaluate that. Of course, I need to go and have a look at my firm's resources. Again, just addressing all these questions. Right, now as an engagement partner, remember they take the sole responsibility of the entire audit. So they do need to just go and obviously read through each question, identify whether or not they've taken appropriate actions to say, eliminate the threats of Nicole not being honest. How did we do that? Okay, so here they're taking responsibility and ultimately they will need to sign off as an engagement partner. Again, reiterating that responsibility. You'll note if I'm not signed in as a manager or a partner and I say prepared, or I'm in a manager review section and I say manager reviewed, it's not going to initial my engagement partner here. The only way I can activate or say this was signed by the engagement partner is if the engagement partner logs in and signs off the working papers. I will do a few later. Okay. 1004, my favorite one. So why is 1004 important? Well, you're looking at the accounting framework. So let's just take a teeny step back. I have an IFRS SME set of financial statements. Okay. Why would considering my accounting framework be important, especially in the planning phases? Well, I need to give an audit opinion whether the financial statements fairly present in accordance with X, Y, or Z framework. So here I go and I get all these questions asked speaking towards my framework. Okay. Am I going to use the same framework as last year? Yes or no? If not, if so, what is the reason? I follow the question process. So I will say, no, my preparation does not differ to last year. What are the Fs to be audited? The accounting framework used for the preparation. So am I going to be satisfied saying IFRS if I'm fully aware that the financial statements are actually IFRS for SME? So I just go and I answer their questions. Further to that, we're now going to evaluate the appropriateness of the accounting framework. Because yes, I may have chosen IFRS for SME to draft the financials, or the client did. Okay, let's get that right. Client did. All right. Now, client has gone and said, oh, these are financial statements in accordance with IFRS for SME. But we have a whole lot of questions that might deem that different. So we go and we answer them. Are these going to be general purpose financials? Yes or no? Was this estate owned? Yes. If I say yes, please note I need special permissions from National Treasury that needs to be obtained to use a specific framework. Again, questions. How is it affecting my ultimate solution? Okay, not state-owned company. Did the MRI state what type of framework needed to be applied? If so, what framework got selected? If not, okay, we still have one final question to assist us. Well, does your entity have public accountability? So before I finalize the last question there, we'll see here. Conclusion on the accounting framework. At the moment, I've got incomplete questions. It's unable to specify or assist me with that respect. I go and I say I have public accountability. Again, Draftworx is going to give me a kind of warning to say, hey guys, look, you either need to review the questions that you've answered because it's indicating we should be doing IFRS. However, we're doing IFRS SME. Okay, so again, wherever possible, we will give you a little bit of an alert to kind of point you in a direction of either the questions or the answers need to be adjusted, or I need to reevaluate where I'm going with said audit. Okay. Now, I realized, nope, sorry, didn't mean to say public accountability. We're good. Now, system says IFRS for SME. Yes, okay, I'm on the right track. Now, what is my accounting framework? IFRS SME. And was the correct accounting framework used? Again, check the client's financials, check what we're doing, yes or no, and then I can go and have that response in my financial statements. All right. Let's see, what's the next one? Engagement letter. So remember, we do have an engagement letter template included in the file. It's 10.30, right? You are able to, customize it, set it up so that it can suit how you would like it to look. Alternatively, you are able to import and use your own. You don't have to use 10.30. You can use your pre-set up engagement letters if you would like. Just note that I do have settings where I can go and select from drop downs or amend if needed if I would like to use Draftworx's version. Okay, so we'll just say that we're going to use this one. Now, I would like to hyperlink my engagement letter to say, I have done this. How did I do it? Where's my reference? Well, over here, you'll see under shortcuts, we can do hyperlinking. So I can choose my hyperlinks and it'll list all the documents that are inside my Draftworx file. I go and I look for the respective one I want to link to. So we're going to use 10.30 and all I do to hyperlink is double click. And there I now have my reference. So whoever's reviewing my work can quickly find where I've referenced said documents to. Again, I see yellow cells. Again, it's telling me please complete certain sections. Let's go and have a look. Right, EQR requirement. Is the entity or client a listed entity? So here again, I'm getting asked a question. The question will also navigate to what is required to be done by me, the auditor. Okay, so I have not got a listed entity. Action 8. Right. Okay. Your firm's quality control manual, as mentioned, you can contact sales with this one if you would like assistance in that respect. However, you are going to go and document all the criteria that your audit firm has determined for an audit file to be subject to an EQR. Was the criteria applicable to the entity or client? So here you're evaluating your EQR requirements. Yeah, you need to go and give a conclusion. Today we are not going to do it. It's not required. Okay. When I do, you can see my responses are pulled through automatically. 10.002. We're looking at your public interest score and your section 92B and 92 considerations. So, very crucial question here is, why would I want to consider my public interest score in my planning? Okay, well, this is going to either indicate whether I have a small sized entity, maybe a medium size, maybe a very large size entity. This will all kind of, again, navigate me to identifying what scale of an audit am I doing. Am I going to be testing multiple samples based on the size of my entity? You know, it's talking to that specific risk level as well as how big is my entity. Have I only got a one-man band and they have one stream of income and like 5 main expenses? Do I actually have to audit it? So these are very important considerations in that respect. So let's go and see, what is the type of entity that I have? A private company. Okay, how are the apps compiled? Were they internal? Were they independent? Again, I'm just kind of answering said questions. Average number of employees, so we'll go with 15. Total third party. Okay, so we're putting in, let's just take out a digit there. We're putting in the information from where? From the client financial statements. What was your total turnover? Okay, how many individuals have a direct or an indirect beneficial interest? So again, I need to go and indicate I only have 2 members. Okay, I get a whole public interest score of 143 points. Okay. Now I have further considerations. Was the MOI indicating that I need to be audited? If so, you'll see none of the other questions become important, because why? Well, the MOI indicates I need to audit, so I'm going to audit. Okay. However, if that was a no, I need to evaluate the rest of the questions. So of course, you look at the fiduciary assets. No, we're going to say no there. Are all the shareholders, also directors? Is it an owner managed or not owner managed? How am I going to address that? Just say yes there. Was this a voluntary audit or a voluntary independent review? Okay, again, I need to indicate which option is applicable. Today, we're doing a voluntary audit. Okay, so again, yes, voluntary audit's been applicable, so I do need to comply with my audit, right? Now, is the entity subject to the rotation of auditors? So we're going to play around with this one slightly. If I've been doing the audit for 3 years, you'll see that my response on 10 goes and says, partner's been auditing for 3 years, no rotation requirement. Let's change it up a little bit. Let's say we've been doing this audit for a solid 10 years. Okay, now I have a different response. Partner rotation may need to be considered. Okay, how are we addressing that? Then, of course, we go address it, see if we need to address it, how are we maintaining our independence from that respect. Carry on with your questions, and we get to our final one. Engagement partner conclusion. Right, this is a very important conclusion to make because it does set up the tone for the rest of the working papers. So I do need to indicate whether or not, based on the above, I'm willing to continue the audit, accept the client, and of course, I go and say accept. If not, am I wanting to withdraw? Am I wanting to decline? I do need to make this assessment. Is a very important one. I'm going to go mark this as prepared. Okay, just by completing 10, I've practically almost done most of my pre-engagement activities. I just forgot to sign off accounting framework there. But now we're going to look at planning materiality, identification of audit sections. Why are these two important? Why are they in your pre-engagement? Well, let's go and have a look at them. So planning materiality, and of course, we have our identification of audit sections. Why would I want to look at the two hand in hand? Well, they do kind of collaborate between each other. So when looking at identifying your audit sections, why is this important? Why would I want to identify the sections? Well, I want to make sure that I'm at least considering everything I'm supposed to in terms of the ISIS, okay, as well as making sure that I'm not over auditing or under auditing. I've considered everything in its fair values. Okay. Now we're going to highlight a few things here. what is my performance materiality currently sitting at? Sitting at 1, all right? I've got investment income, I've got other income. Just focusing on these two guys at the moment because they are a little bit smaller than the rest of my balances. I see that the system has marked it as quantitatively material. Why? Well, it's over my materiality amount. Great. I've got nothing indicated under qualitatively materiality. Okay, we'll come back to that one in a moment. It's telling me that it is applicable to my audit. So even if I went through this whole document, we would actually notice that every single line item, income statement item, balance sheet item has been marked as applicable to my audit. Why? Well, my materiality is sitting at 1. So everything is material. Can't find a 20 cents mistake anywhere because my materiality is 1 and collectively I could go over that materiality. Okay, so why is it showing 1? Well, I haven't decided in planning materiality what to choose yet. So that's why 1010 and 1020 talk to each other. I need to work out what my planning materiality is before I can even think of identifying my audit sections. Right. When you're looking at your planning materiality, we need to decide, well, how are we going to get that materiality? Where do these figures come from? So you'll see trial balance description. Am I using opening? What is the opening? Well, if we go to our working trial balance, this is my opening where I imported the figures from and included. Okay. If I happen to be doing an interim audit, I would then select interim figures. Okay. So I need to decide which trial balance I am choosing. Also, why am I choosing it? If your values happen to be imported and apportionment is required, you can see we can go and indicate the number of periods that the trial balance relates to, as well as how many periods will be in a year. Why would we want to apportion? Well, in the event that I am doing, say, 10 months, and I'd like to kind of gross it up to get close to what 12 months might be to at least evaluate my materiality on a better basis, I can do so if I wanted to. Okay. Indicate the broad nature of the entity. So you'll see we have 3 natures. Are we profit-orientated? Are we not-for-profit? Or are we a specialized industry? If I don't select that, you'll see that under my calculation, I've got all the materiality bases. I need to decide which is applicable and choose as such. We're going to go for profit-oriented for now. As always, I need to explain where my thought process is going here. So why am I using the figures that I have indicated I intend to use? And on what basis? Okay. Of course, you have users of the financial statements. Said users might influence your planning materiality or they might influence something else. So, of course, you want to identify those principal users, comment where possible. Action 2, your benchmarks to be used. So remember at the beginning we said your working trial balance is one of the crucial documents. Why? Well, how did I get to my 133 million over here that is indicated as sales? Well, I got there because in my working trial balance, I went and linked everything to sales. So again, trial balance being as correct as possible is crucial in identifying your planning materiality as well as your identification of audit sections. Because if I had gone and accidentally linked a whole lot of cost of sale items to sales, my revenue value would be significantly lower, which is not technically correct if I'm looking at it from that perspective, which would then affect my overall materiality basis that I may have chosen, as well as what my identification of audit sections may be. Okay, so trial balance is always a good one to make sure it is speaking to what it should be speaking to. Please note, okay, if you need to, you are able to update these values. However, it is only in certain cases, okay? And if you adjust and verify the numbers, preferably add a reason as to why you are updating and they are different to what may be on your financial statements. Action 3, your overall planning materiality and overall performance materiality calculation. Well, how is this determined? Okay, so of course we have our basis, we have our typical percentages, okay, and we have the percentage applied. Now, in some instances, I know that sometimes gross revenues, firms tend to maybe go for 3% or whatever the case may be. So if I try and indicate that I want the percentage applied in this instance for gross revenue to be 3%, I'm going to get a little shouting at and says invalid value. Okay, all right, I need to use a percentage within the range. Now, you'll note that we have a other, which I can describe. So in the event that I did want to use 3% of gross revenue or maybe something else for consideration, I can edit the description in other. I can go apply my typical percentage there. I can utilize the percentage applied to give me the possible planning I was looking for. All right, so this is just an alternative to if, for whatever reason, you have a different basis you would like to use or a different percentage that is over and above what we have on our working papers. If I try to make my materiality 2 million, I'm again going to get an invalid value. Remember, the possible materiality is in line with all these values over here. So I can go from a minimum of 1 to, in this case, a maximum of 1.336. So we're going to settle on 1.330. That's going to give me a performance materiality of 997,500. Of course, my percentage applied, again, depends on firm methodology or how you want to set it up. You are able to adjust said percentage. However, if you do adjust and anything is, I don't know, not the standard, you would just include a document for firm methodology explaining said process, just to cover yourselves as well. Right. Again, why have I selected my materiality? Not because the voices in my head told me to, but because of X, Y, or Z based on the client's trends, we have elected to choose X, Y, or Z. Okay. Now, we do get action 4, where I might want to calculate a specific planning materiality. So again, yes, we still have all our materiality bases. I can also choose other to set one up uniquely. This is just in the instance where maybe something has come to your attention or the client has specifically requested a certain area be looked at. Maybe my client is concerned that they have cash is getting taken from their cash sales, so they feel the revenue might be distorted. Then yes, maybe I can go and choose a selected materiality where I'm only going to base that on for revenue. I'll keep the rest of the items for consideration at 997, but for revenue, I'll consider 450. Again, I'm able to make those choices. Your clearly trivial threshold, okay, between 0.5 1%, you select, you explain why you selected as such. Okay. Once I have set up my planning materiality, my identification of audit sections is now going to look slightly different. Why? Well, if we look at investment income and other income, it's no longer quantitatively material. However, Draftworx has triggered that I need to consider whether or not it would be qualitatively material. It is still indicative that it is applicable to the audit. So yes, maybe it's immaterial and I do not want to test it. I can't select no. Why? Well, I still need to consider the fact that there is a balance. Okay, so it is applicable to my audit. However, if I don't identify any further risks to said component, then I will know that I don't need to do any further testing, which we will see along the lines of once we get there. Okay, of course, address whether or not something is qualitatively material. Okay, in the event that you are fully aware that your clients may have, let's say, amortization of intangible assets, they just haven't processed the journal. Okay, so it's not on my trial balance, but I am fully aware that the account transaction will exist, right? I am able at this planning point of view to go and indicate that said item would be applicable to the audit. I wouldn't want to go and do this for all zero balances. I would only want to do this if I had knowledge that something will exist and I intend to test it. And I can say yes, and I'll make sure that when I do, the audit program will populate. Yes. Sorry. I think just as a heads up, we will run a little break at about 1:45, if that's cool with everybody. Okay, great. All right. Okay, now, of course, if it's not applicable, I wouldn't want to populate the program. Why? Because then it just means I'm now going to have to go and address everything as not applicable, where I could have just left it as not considered for the audit. Remember, you've got classes of transactions to consider. You have account balances to consider. Okay. Then, of course, we get disclosures. Related parties, contingent liabilities, we've thrown that in. However, you may want to consider cash flow. So again, I can go and add my additional disclosure, answer the relevant questions so that a working program will populate. The other special risk items are for certain things like significant or special considerations. So journals we have thrown in and we keep it where it is, okay, so that we can populate our working papers, right? If I want to add anything else, I can add it, indicate that I would like it applied to my audit. Now, in the event that we didn't know that there was amortization applicable, okay, it doesn't mean that, oh dear, by the time I get there and I identify this in execution, I can't test it. It's not a problem. We can come back to 1020, where we can then indicate said transaction or balance is applicable, and we can just repopulate that working paper. Okay, it does not affect any of your previous ones. It will just add your extra one in for you. So never panic if you don't identify everything in this stage. We always have a backup. Now, we get to one of the first and foremost important documents for an engagement partner to look at. Here, they are going to say whether or not they intend to sign off the engagement setup, right? So this is why I strategically leave some questions left out. You'll see we get results from the documents. So yeah, it indicates, yes, the partner accepted the engagement. I can therefore go and confirm as such. But however, if we look at 1002, here's my first warning. It says, hey, you haven't signed off 1002. Okay. Also, you haven't completed all the questions. You found 2 issues, of which only one was addressed. Are you sure at this point, before continuing, do you want to continue? Okay. It may be a case of, I just need to, I don't know, document the reasoning, or I'm just waiting for a response, but I'm 100% certain it's not going to affect my audit firm's independence. Then yes, maybe I can confirm. So this needs to be considered before proceeding. Also, you will note that you can lock your planning materiality in 1010. Okay, we wouldn't want the materiality to be going up and down like a roller coaster, so we lock it when this document gets signed off. So if I was the engagement partner, I'd log in. Okay, please note any logins are only provided via email to the main contact person through our support inbox. Okay, we do not give these over the phone or webinars or any other way. Okay, it's only sent via email. When I do log in as a partner, you can see I've got a partner. I can go and do partner reviewed. Right, I have now locked my materiality. Okay. Great, section 10, done and dusted. Okay, there's a few planning ones that we just need so that we can populate our programs. So we're going to look at the first 2. Verification of opening balances, new engagement. Why would I want to do that if I'm on a continuing engagement? Well, thank you, Draftworx. Because I said that I am doing a continuing, it has given me that little nudge to say, guys, look, you did indicate that this, was previously audited by yourself. You don't need to do this. That is 6 whole working papers I don't need to consider. Score, one less thing to do. I can now go mark it as not applicable. Why would opening balances be a really important document when looking at an audit? Well, again, this one is great for considering any potential risks that may happen. Okay, yes, we're auditing current financial statements, However, I need to make sure at least that the opening balances that I am auditing are correct and agree to last year's audit. So let's break this one down a little. Here you have your trial balance from your previous year. Where do I get these figures from? So just at the top of my head, I can see 5.3 million, 8.3. Where did I get these from? Again, my crucial one, my working trial balance. There's my 5.3, there's my 8.3. Right. Now, let me just see how many line items. Yeah, we have 243 line items. So I do not feel like going and manually typing in 243 items, okay, with their account number, their description, and their value. So in this sense, the TB from your client, we have a way to pull that in, okay, and do a whole control find match. So how do I get there? Alternate TB. Right, you'll see here, please value paste into this exact layout. So Nicole over here, I log into my client's software, pull a trial balance in Excel, and I just sort it into 3 columns: account number, account name, and my balance. Okay, we go find said update. And somewhere there should be a thing. Great. Now I go and I've got my numbers, my account names, my values. I select it all. Sorry. Let me just quickly go and select again. So I select all my figures. I go right click and copy, or I can control and C, just depends how you want to set it up on your side. And again, over here, I now need to value paste. So I do need to use the mouse. Control or right click, paste special. What am I pasting? Values. Why do I want to value paste? Well, if I value paste, the cells remain editable. So in the event that I may have copied the wrong or not everything, I can redo said process. Once I have copied and pasted into this layout, the opening balance test will go and pull through the figures. Okay, I now didn't have to go and do this 243 times and type all of that. Saved me a little bit of time by just copying and pasting it through. Goes and calculates any differences. So any differences is pulled to a difference sheet, and then I can go and raise a comment. What happens if my differences were a material difference identified? The question remains, has the client processed the journals, or is this a misstatement, or how do I handle it from here? Okay, I'm not going to go through the whole planning section, so you can all breathe a sigh of relief. We're just going to focus on a few things. Prelim analytical. I used to love prelim analyticals because they do give you a broader picture. In some instances, you can easily spot a really big problem. In some instances, you can really address quite a lot in one go. Okay. Now, hypothetically speaking, okay, I'm keeping my balances as opening, but hypothetically, if, for example, my property, plant, and equipment indicated 0 movement, okay, and I was looking at the fixed asset register and I noticed that they had depreciation of like well over $1 million for the year. Why do I have no movement? Okay, again, triggers did we process something? Are the financials misstatement? What happened? Okay. Now, in terms of comments from your clients, you can either choose to get management comments for deviations above 10%, meaning your percentage change, okay, 20%, 25%, or material deviations. How do I know which one to choose? For a methodology, ask your partners, which one do we go with? And you follow that process. Okay. Now, again, hypothetical situation here. My management are going to tell me, listen, guys, we didn't raise the depreciation. Okay, that's their comment. Great. What's my comment? I agree. I can see so. Okay. Now, document the risk. So have I identified a risk here? Well, yeah, they didn't raise depreciation. So need to investigate it. Is this a business risk or an inherent risk? Or is this a fraud risk? Okay, so I need to distinguish between the two and select the appropriate one. Naturally, you'll go through the whole process, okay? And of course, we have another sheet called ratios. Why are ratios important? Well, I'm sure in the financial statements, I have indicated that the financial statements were prepared in accordance with a going concern principle. However, I have a look at my liquidity ratio and it's telling me a completely opposite picture. Basically, the client is in financial distress, but the client's indicating they're a going concern. Might raise a risk, right? So I do need to just come and have a look at my ratio analysis, identify any potential risks of material misstatement. Okay. Mark that as prepared. Let me just see. All right, now we're going to dive into understanding the nature of the entity, and then we'll take a break, because this is one of the last major ones that no one really enjoys doing. I know, I've been there. Understanding the nature of the entity is a long, exhaustive process. However, Draftworx has got a light at the end of the tunnel when it comes to understanding the nature. Yeah, right. So I did say when I came across certain colors, we would identify them, we would discuss them. So you'll note here, okay, on the first tab, it's called scoping. We'll explain it in a second. But already I can see different colors. These are our tan blocks. They give you a little bit of a tip, maybe a detailed explanation as to how to approach said document, or in some cases, if you do this, please just note of X, Y, or Z, right? Then, of course, I get dark blue cells. Now, if you use the financial statements, you know that the dark blue is normally an input cell to give you a desired output. In this instance, it is still an input cell. I can input information, get my desired output, but with one added bonus in auditing. That information that I put in that cell, when I roll the file over to next year, will be exactly there next year. So where possible, obviously Draftworx has gone and identified certain areas through the planning process where information seems to stay stagnant, i.e., your owners normally stay the same, your shareholders normally stay the same, etc. So we keep that as a roll forward cell, meaning next year the information will be there because it's still kind of applicable. Before we dive into my scoping, let's have a look at my understanding. Okay, I'm going to go all the way down to the bottom. This gives you a better idea. There are 44 points of consideration when it comes to understanding the nature of the entity. Of course, this is a big document because understanding the client gives you a broader idea of how their processes are run. Are there any potential risk factors? Do we need to adjust our audit plan? All right. Now, 44 seems like a lot. So if I look at my scoping in this respect, we're going to see here, I have a whole lot of potential topics, okay? Which means I can now go and say, well, actually, if I know my client well enough and I'm aware that something is not applicable at the get-go, I can actually indicate that and reduce the amount of audit working that I have to go and do. So, for example, as the entity part of a group, okay, there's a whole little group structure here. Instead of me now going to say NA, or not applicable, or no, it's not, whatever I want to document, I can actually go to my scoping and say, hang on, this entity is not part of a group. So I'm going to say no. But please note, when I do, a new color is activated, red, okay? We all see red flags or stop signs. This one says, whoa. You've gone and you've indicated that the entity is not part of a group. We've identified a contradiction to what you've said. Yeah, did the entity make investments in subsidiaries? I'm saying yes. So the two are contradicting each other. Therefore, I need to go and say, actually, no, we don't have investments in subsidiaries because we are not part of a group structure. So here I can actually scope out what I know is not applicable at the beginning. However, please be careful. If you scope out something after you've gone and raised a risk on it or addressed it somewhere, it will still pull through to your risk register. It'll hide it on your understanding the nature of the entity, but it'll still make it indicative that there was a potential risk on that working paper. So just be careful when you're scoping out to make sure that you're not also hiding certain risks already raised. Okay, so I'm just going to go and randomly select a few just to indicate. that we're reducing our 44 to, let's see, what have we reduced it to? 38 matters. I can handle that, no problem. Okay, let's have a look at the top here. So again, remember, dark blue cell, I can go and indicate information. Spell my own name wrong. Okay. When I do next year, when I'm doing 2026's audit, NASIN will still be there. I will not have to repeatedly put in that information. So we are trying to save you some time. So I know for anyone doing first time audits, this is a painful process. I mean, it always is in auditing, but at least be aware that when I do go fill in this information, it will be there next year, hopefully saving you a bit of that time on those precious budgets. Okay. Now, potential risk factors. So throughout each section, we have identified potential risks for you to consider. So yeah, I'll go and indicate whether or not something is a risk of material misstatement. So I'm going to just say that we have additional reporting requirements this year. Again, it's a business or fraud risk. Go and identify it. Run through the document. Why is possibly identifying any risk of material misstatement important here? Well, you'll see once we hit our risk sections. Welcome back, everyone. We've done quite a lot of thinking process here, so I know it's a lot to go through, but we're almost there. Okay, so I've opened up a few preempted ones while we were in the break. Okay, so at the moment, what we've basically covered up to this point is just looking at the entity as a whole. Switch off the camera in a second, so we're all good again. All right, so we've looked at the entity as a whole. Now we're going to assess a few other important considerations. Control environment, okay? Control environment also assists you in identifying either potential risks or giving you the possibility to consider whether you would like to do some tests of controls. Remember, even if I indicate I'm going to test a control, I still need to consider a substantive procedure, but I can consider it. How am I going to get that right? All right, now I've opened entity level controls and IT controls. So entity, we're looking at the entity as a whole. How did they, go and establish their control environment? So again, of course, there are questions. So describe how management communicates the need for integrity. Does the entity level control exist? Yes or no? Okay. So again, I can go indicate yes here. I don't have to indicate yes for everything. Maybe I deem answering that is sufficient. I can go and address it or add comments, whatever the case may be. Now I need to go document my understanding of said entity control at the client. Is there a walkthrough test required in terms of your ISO 315? Yes or no? If yes, document the risk assessment procedures or walkthrough performed on said control. Now we get to an interesting one. Is your control design adequate? Okay. If I said no, again, I get a trigger. I now need to go and say, well, where were the control weaknesses communicated to management? Okay. I'll go and do that. I document said control risk. Please note, however, if I identified an inherent risk that I would like to address in my audit programs, go all the way down to the bottom. Under Action 5, I can go and document said inherent risk or fraud risk if I identified it. Okay. Now, let's switch the scenario a bit. What happens if my control design was adequate? Okay. However, I'm still getting yellow and I'm still getting a conclusion that I can't test controls. That's because I haven't answered the next crucial question. I can have an adequately designed control, but the question is it being appropriately implemented? I have a stop street sign. If I just drive through it, the control is there, stop sign there, but I'm just ignoring it. Okay, so I need to go and identify, is this appropriately implemented? Yes. If I do, I can then conclude that test of controls could be performed based on the design and adequacy of implementation of said controls. Then you go through the whole document, whatever's applicable, you address it. Okay. Now you're going to do an overall conclusion of said entity's control environment. Again, a whole lot of questions. You consider it, ultimately addressing your overall effectiveness. Now, are my controls effective or are they ineffective? In my instance, I'm going to go with an effective control environment. Okay. Now, again, pretty much similar to my entity, I get IT controls. So yes, I have a whole entity where the control environment is sound, but what about the IT applications and the IT control? So again, I need to evaluate those. So we have our dear old general IT controls. So same principle. Does said IT control exist? Do I need to go and do a walkthrough, document all of that? And again, same principle. Is the control adequately designed? Is it appropriately implemented? In my scenario, I am indicating a very healthy, effective environment at the moment, okay? But it's to show, obviously, certain things down the line. Please don't just say yes because I said yes. Here we go all the way down to the bottom. So any inherent risks identified, I address them, indicate whether or not they are business or fraud related, and again, what is my overall control environment like? Are we effective? Are we ineffective? Because I could have 1 effective control, 6 ineffective controls out of 7. Yeah, it won't be an overall effective environment. Okay, so I need to use my discretion, okay, and my skepticism here and evaluate that. On the next tab, you get your applications. What do we mean by applications? Well, are we using something like Pastel, Xero, Sage, QuickBooks, any one of those softwares? Are we using an HR administrative software? Okay, whichever software I am using or application thereof that significantly affects my control environment or the figures my financial statements are based on, I would probably want to go and use one of those applications, assess them, address it. Okay. I'm going to go with my Pastel. However, I can change it to Sage. I can change it to Xero. So again, I can just update the description there. I'm going to indicate yes. Now, when you indicate that you are using said application, you need to evaluate the application. So there are a whole lot of questions here. You either indicate yes or no. Okay. Read through them. Okay. Why are these questions important? Well, at the end of the day, these questions are going to assess whether or not the IT application is either complex or not complex. If complex, would I probably need an IT specialist? Or if it's not complex, am I okay in evaluating set controls? Okay. So again, if I need an IT specialist, I would have to evaluate their competencies or obviously do a working paper and assessing the use of an IT expert. In my instance, which is using Pastel, there's no need for an expert at this point in time. Okay. Now we get to action 7. Indicate the class of transaction, account balances where, the components are being affected. So do I intend to test controls? Okay. Again, this speaks on the nature or extent of your audit plan that you're intending to do. If you're intending to test controls, you would indicate as such. If not, then you can indicate no. Again, this is just allowing you to kind of select it so that it can pull through to your audit plan accordingly. Okay. I'm going to stick with our scenario where our dear old client forgot to raise their depreciation, and I'm only focusing on depreciation at this point. Remember, I have to consider quite a lot. I'm just sticking to one simple scenario here. So I'm going to indicate yes over there and yes over there. All right, you need to indicate, make sure there's no yellow yeses or yellow spaces at the top there. Okay, I've identified my IT controls. Okay, last one just to consider from that perspective in your major planning is revenue fraud risk assessment. Okay, now just please note in accordance with ISO 240, right? You do need to go and identify the different revenue streams at the client. So I can go and I can indicate retail revenue, or I can indicate interest, or I can indicate rental, I do, however, need to identify my stream. I then need to indicate whether or not the fraud risk for the revenue can be rebutted. Okay, yes or no. Okay, I'm going to say no over here. So there's my stream 1. Now I need to go and identify all the controls related to significant risks. Please note, you are able to copy any of the risks that you've addressed either in the system notes or 1240 or 1245 and just paste it into the relevant section over here. Okay, so you can control copy, control V, put it in here. You don't have to retype your scenarios. You can use shortcuts like that. You can go reference to where the control was documented. Again, use the hyperlinks. It'll just jump them there a lot quicker. Was the design and implementation of the control adequate? Okay, so again, yeses or nos. And does tongue-tied. Does the auditor intend to test the operating effectiveness of said revenue controls? Again, you can indicate yes or no. Now, what you will note is because this is a significant risk, you will see that I have substantive procedures to be addressed. I can go and document my procedure I intend to test, which assertion I'm going to be addressing by said procedure, okay? And then I can do procedure 2, okay? And again, which assertions are being covered. So you'll note that it's telling me I haven't addressed all the assertions. So I do need to at least make sure I have considered them in their correct, respects and do the procedures to address all of those. You will note, because it's significant risk, level 4, okay, instant significant risks. These will pull through to your audit program automatically as procedures for you based on what you have documented under the respective procedure. Okay. Now, section 13, last thing we're going to check out before we kind of hit a ending point of our planning is your system notes. So you'll notice dark blue cells because in most instances, hopefully, the client isn't changing their system description day in, day out. They kind of keep it the same year in, year out, okay? So you're able to go document whatever you need to. And you'll note that, okay, according to this, an application was identified, pastel, okay? There is no need to go and do an IT audit specialist based on our conclusion from those IT controls that we had identified. Okay. If you would want to use another existing system description instead of documenting down below, you can indicate yes. Okay. This will enable you to pull in documents. Then, of course, over here, you can just go and document only the controls for which your walkthrough test would be obviously implemented on. However, if you don't have any of those respective setups, you can just keep it as no and go and document. All right. Now, before we proceed with documenting, I just want to highlight something. So again, I'm sticking with my depreciation. You'll see that I've got effective controls pulling through. So these are all conclusions based on what we had done in planning. So starting on 1330 wouldn't have been a great idea because none of this would have pulled through automatically as of yet. So you can see how the flow kind of assists me in that sense. Now, you'll see that I need to complete questions above in order to evaluate my control, design and implementation testing. Okay. Now, I can go and I can say, yeah, well, the control environment was effective or it was ineffective. But I see here it says no controls identified. Why does it say that? Well, I haven't identified any control activities up here. So again, naturally, I need to go and document said understanding. I can go document whatever I need to, identify whether or not it is in a manual or an IT type control, the component to which it relates. So we'll go with depreciation because we're sticking with that scenario. What was my control activity? Well, are we at initiation? Are we at recording? We will go with recording because we didn't raise the depreciation. Assertion addressed by the control. Well, which one was this? So let's go with accuracy, for example. Again, please remember, use your professional judgment here. I'm just choosing selections to evaluate certain respects. It's an example scenario. Please don't follow me word for word here. Is it a manual control or an IT control? So again, if I say manual, I don't select a related IT system. If I say it is an IT control, I then go and choose my application system related to said control. It's going to stick with manual. Okay, your frequency of occurrence. Are we looking at daily? Are we looking at weekly? Are we looking at monthly, quarterly? Okay, this is again based on the frequency of said control. Okay, I go and I select it. Well, this should be a monthly control because every month I'm supposed to raise the depreciation. Okay. Again, you just kind of go address all your questions. Now you get the question. Is your control design adequate? Well, it wasn't adequately designed control. However, it wasn't appropriately implemented. I need to document where I addressed said communication and weakness. Document the actual risk identified. What was my actual risk identified? No depreciation was raised. Was it a risk of material misstatement? Yes or no? Is it business? Is it fraud? Go and identify. Now, I have 0 effective controls and 1 ineffective control. Okay, so you can see how I've identified a control, but it's not effective. Okay, if, however, I said that the control was effective, 1 effective control, 0 ineffective controls. Again, I do need to reevaluate. So we are going to say that this was effective. Okay, even though I'm contradicting myself a little, but again, it's all for an example purpose. Okay, righty. So up to this point, we've done our planning, we've done our system notes. What have we been actually doing this whole time? Well, we've been potentially identifying any risks of material misstatement. Now, this all pulls through to our lovely risk register. Okay. For this, I do want to highlight, I'm going to show a different file off just to explain part C, okay? But let's have a look at part A. So throughout my process, you'll see that I have identified some risks. Not a lot, but just enough to go and evaluate them. So management override of controls by means of journals, that is a complementary one. It is always there. Why? Because journals are such a significant risk item. They are subject to manipulation or just moving money around if one wanted to. So, of course, it's a compulsory significant risk in terms of ISO 240. So we have highlighted that one automatically. You'll see now I have my no depreciation raised. Where did I find it? 1125 in my prelim analytics. It was a business risk. Okay. Along the line, we also saw that we had an additional reporting requirement in understanding the nature entity. That's pulled through. Then, of course, in my system walkthrough, again, I raised no depreciation raised as a risk. Why did I raise it again? Well, it was addressed in that particular working paper. Now, in this instance, you'll see that I have number 1, 2, 3, and X. Why do I have an X? Well, we've identified that the last risk here, no depreciation raised, is potentially a duplicate of another risk. So in other words, you don't want to go and test the same risk multiple times because one set of procedures would address the risk, okay? It just so happens that the risk might be identified in various areas throughout your audit. So if it is a duplication, you can indicate as such so that you're only testing it in one go. All right. Now, in the event I had deleted risks or this was a rolled over file, I had prior year risks. So I've got no depreciation raised from a prior, I have a revenue recognition one, and a complex organizational structure. You'll see that in this instance, it had allocated it to part C. Now, again, one needs to evaluate your prior risks as well as any potential deleted risks. Because I might be a first level clerk and I am just raising risk after risk after risk. However, my risks are not actually risks. It was rebutted or it was able to be reduced. It's not actually a risk. It was just an error. So in certain instances, I can go and say, oh, this isn't a risk anymore. However, said partner or manager needs to evaluate if I'm not just trying to say, oh, I've identified 20 risks, I want to just do 15, I'm just deleting. Okay, I need to, as a manager or partner, log in and indicate whether or not the risk is still applicable or if I want it permanently deleted. Okay, I will still come onto my prior risks and then assess said prior or deleted risk. Okay. Right, how do we evaluate said risk on our risk list? Well, let's go with our current risks. Now, I'm not going to dive into the journal ones because it is significant. Of course, you go and you address all the controls, etc. We have, however, given you some substantive procedures to be addressed on those working papers. We're going to focus on the one I've currently raised. Okay, is it a fraud risk? No. Okay, is it a financial statement level or is it an assertion level risk? Well, if you've identified a financial statement level risk, you can go and apply the overall response to the risk. You would then describe said response, where was it addressed, and then consider whether or not said financial statement level risk can result in a component or assertion being materially misstated. If so, you can say yes. Then, of course, you would go and select respective components. Going to switch up my response here. We are actually just looking at an assertion level here. So which component did this risk affect? In my instance, it has affected depreciation. Okay. I can, of course, go and choose fixed assets as well if I wanted to, but we are just simplifying mine for now. Now I need to go and use my professional judgment and skepticism for the likelihood and the magnitude of said risk. Please note, I am just choosing 3 for a hypothetical situation here, okay, because I want to highlight a very key consideration when doing a certain working paper. So I want something that is easy to spot. So I'm forcing mine to be a 3. So my overall risk is a 3. That is what I intend to go and obviously now create procedures to address said risk. Okay, which assertion were affected or applicable? So I'm going to choose a few. I'm going to do completeness, accuracy, and presentation. Okay, here I'm assessing my risks. Why am I assessing them? We will see in a moment because they're going to pull through to another document and it's going to affect my audit programs. Okay, your risk summary. What do we notice that's significant here? Well, my depreciation, okay, I can see it's identified my overall response being a 3. However, the rest are all showing zeros. Cool. Okay, just remember that. Let's have a look at our next document. So this one is also kind of a really important document for managers and partners to consider. Your RAC summary. Okay, now up to this point, we've identified the risks. Now we need to assess them. So let's look at 3 things here. 1, my revenue. Okay, at this point, there are no inherent risks identified. However, I've got to at least maintain that I get a desired level of 1 assurance, ensuring that all these assertions are free from material misstatement. Okay, it's been carried through to my audit plan as such. Remember, a 1. Okay, in my other income, which was an immaterial item, okay, no inherent risks identified during the process. So therefore, no further audit work is required. Please note, if you do intend on testing immaterial items and you would like to do for completeness and presentation, you just need to indicate as such here so that they can pull through to your audit programs for you. Okay, however, I'm not intending to do so. No further audit work required. Let's look at my depreciation. Alrighty. So, of course, I identified inherent risks. Okay, this is being carried through to my audit plan as such. However, my control evaluation for accuracy we had deemed was effective. So there is a recommendation that I can go and test controls. Now it's up to me. Do I intend to get the assurance from test of controls? You know what? Yes, I'm going to do a test of control. Okay. If I happen to say yes to something that I didn't previously indicate as such, again, I'm getting my red flag. Okay, stop sign. If you want to place reliance on this control, I need to either go and perform additional walkthrough tests on another control to determine whether or not that control is effective enough for me to place reliance on. Okay. So again, where I contradict myself, it will let me know. Okay. So of course, each component I go through, I evaluate, I assess. So, okay. Not going to do action 3 just yet because we are going to highlight why this is an important consideration document. Righty, first, please note any significant risk assessments, i.e. anything level 4, right? It will not show on this one. This is for all your low to high risks, okay? Not just significant risks. Significant risks are treated completely different. They will not show over here. Okay, they will, however, pull through to your audit program. Okay, but what are we noticing that's a little bit funky? Well, now revenue says I have an overall assurance of 3. I know 1505 was a 1. Okay, or sorry, 160501 was a 1. Other income, I indicated no further audit work required. Why do I now need an assurance level of 3? Okay, this is why either the manager or the audit partner need to look at 1605, go check each component, assure that the final level of assurance is correct, that it's being carried through to the audit plan, and then I go and I conclude over here. If I do not conclude here, or market as reviewed or partner reviewed, I'm going to populate audit programs with a level 3 assurance, resulting in potential over auditing. So very important document to consider here. So me as the audit partner, I'm going to declare that yes, at this point in time, I am satisfied. I'm giving permission to sign off. I'm in agreement that all my risks have been identified. We've assessed them. Happy days. I go initial a date and I go review it. Yay! Now I see what I wanted to see. My level of assurance is correct in accordance to what we have identified at this point. And of course, only my depreciation is showing the 3s because that is what we had identified previously. Audit plan. So just remember with your audit plan, you're identifying your nature, your timing, and your scope. Okay. Now, how do I intend to get my assurance? Am I getting it from test of controls? Am I perhaps getting it from a substantive analytical procedure? Or am I getting it solely from test of detail? Now, for depreciation, we did agree that we are going to get an assurance from test of control. However, I also intend on maybe doing a substantive analytical procedure, okay? And then, of course, a test of detail. So what am I doing here? I'm identifying how I intend to get my assurance. Okay. I then go and give responsibility for each section to a respective team member. So I can assign it. I can indicate the completion date, who's going to sign off first level, second level, and so forth. And of course, for any significant risks, such as my revenue, I can go do the same. Who is intending to do the risk? Who's going to sign off? Right. Now, actually, let me open that one again. At this point in time, we've done our planning. What do we want to do? We want to get our procedures that we need to perform to, give us that desired assurance. So how do I do that? Well, there's working papers. Let me go and populate. I'm not getting any audit programs. Why? Very, very crucial document in populating your working programs is 1795, i.e., your partner is taking the assurance that all the work has been done up to this point, where all risk assessment procedures have been performed and reviewed, all potential risks have been identified, addressed, etc. And then they are going to go and sign off that this has all been done. We can populate our programs. Okay. Obviously, I have not done any of these. So as the partner, I would want to see the results from documents as yes. However, I'm just going to quickly indicate yeses over here to get to my audit programs, because that's where a lot of the work happens, your audit program. Okay. Oopsie, sorry. Please note you don't just go and indicate yeses without actually doing the control, okay? Because it will still indicate as such in another document later on that you did just say yeses, but these were not addressed. Okay. At this point, you can also consider to lock your prelim analytical. Okay. Now, as an audit engagement partner, when they sign this off, they are taking responsibility that the audit of evidence obtained from all the working papers above has addressed all your particular risk assessment procedures. We've identified anything. We've obviously formulated a plan to assess those risks and address those risks. Therefore, I am happy to say yes. Right. You will see on my validation. Okay. Yes. All my components are allocated to cycle. Very important, because if not, then we miss populating an audit program. Is my 1795 correctly confirmed? Okay. Yes. I have correctly confirmed it by actually indicating yeses. Okay. Of course, 1795, is it correctly signed off? No. So if it's prepared by a trainee or a clerk, it is not signed off. The audit engagement partner is taking responsibility that all of this has been done. They're happy to populate. Then, of course, they will review it. They say yes. Now, I cannot populate the programs from 1795. Always need to be in another working paper. So we'll go back to 1705 and populate my program. When I do, now I can see my different business cycles, okay, which will have all my standard working papers included in them. Planning sign-off. Okay, we're going to dive into a working paper, but also understand why planning sign-off is important. Okay, all right. At this point in time, I have a look and I see, okay, there's all my cycles. Yes, they've all been populated. Let's see the red flag again. Planning of the audit program does not comply with the audit plan. Why? Let's go and investigate. So we're going to open up a cycle. We're sticking with our fixed assets. Okay. What you will note when you're looking at it in this view, this is the planning phase. Okay. Why is it planning? Well, yeah, I can go and choose the relevant procedures I intend to test, what components they affect, which assertions are being addressed, what is my level of assurance. Okay. This is planning. We're planning the intended procedures. Now, of course, in each cycle, you do get standard procedures that address leads, accounting policies, the general ledgers, journals. So here I go and I consider all of those. Now, we get to my first one. Okay, so remember we indicated we're going to test control. It says to me, tests of control, plan procedures are inadequate. Why? Well, let's break it down. Here's my planning control assurance required. So we said that test of control was going to, well, we wanted an assurance level of 1 for accuracy. I see a red cell. So why is it red? Well, do I have any procedures? No. So I'm able to, for test of controls in substantive analytical, develop my own. Why would I want to develop my own? Why aren't there suggested ones? Well, they're very unique to the engagement at hand. Okay, so I go and I set up my procedure. Wait, caps lock is on. Do I want to perform said procedure? Yes. Well, I intend to. Okay. Which component is this procedure going to address? Well, this one is particularly aimed at depreciation PPE, so yes. Now, which assertion is said procedure going to address? Read through the assertions, identify the relevant one, indicate yes. Now, what is my desired assurance level that this procedure will hopefully provide me with. 1, 2, or 3, I go and I indicate. Okay. Oh, I don't have a red flag anymore. And I also just see tests of controls. No more inadequate. Same with substantive analytical procedures. Again, my procedures or my plan procedures are inadequate. Why? Because I haven't added my own procedure. I haven't indicated how I intend to get my assurance. So again, I go and I indicate where, how, what. Okay, great. Planning for those two, done. Of course, each cycle has substantive tests of details with a whole list, and I mean a list of potential procedures to perform. Okay, yes, my plan procedures are inadequate. Why? I haven't selected any of the ones that are pre-populated. So of course, I would read through this in a normal manner, obviously selecting the right one to address the right procedures to give me my desired outcome for my testing. However, I'm just going to pick and choose a few. Okay. All right. So again, I read the procedures, I find whichever one is most applicable to my entities or what I intend to test, and I go and select. Now, I've selected a few, and I see, okay, property, plant, and equipment so far is good. I've got a few minus ones. So that just indicates that I might be slightly over-testing, okay? Presentation, I haven't addressed at all yet. Okay, so I need to go and find a procedure to address presentation. However, looking at depreciation, I haven't addressed my completeness or my presentation. So again, I need to just either find the said procedure, or I would be able to go and, add my own if I needed to. So there we go, found one. Scroll. Okay, let's get that. I think I've covered all of them. Okay, so I'm just missing a depreciation completeness. So I can scroll up. I find one. If I'm happy with that procedure, yes, I can go and indicate that I want to test it. When I do, I see, okay, I may have over-tested accuracy here. Okay, but again, that is a decision I'm willing to take. I can either adjust my planning or see how I want to handle it. Once I do, you'll also note that my plan procedures may result in over-auditing. So over-auditing is the negative numbers. Under-auditing is red numbers. All right. Now, okay, I've set what my procedures would be. Awesome. I would obviously go through the flow, do the rest of the programs, set up my procedures. Now, please, for illustrative purposes, this is a manipulated document to give you guys a desired outcome effect in purposes for training. So generally, you would go finish all of these. I'm not going to do that. Okay. Have all the planning documents being completed? Yes. Okay. Have all my programs being populated? Yes. Okay. Now, have the engagement partner given permission for the sign-off of my entire planning section? Okay. Yes, they have for me. Now, normally, this won't affect you guys if you say yes and the planning is not done. Okay. Still show the reds. Mine just indicates that I've completed it adequately because I want to show you what execution would look like. So now I look at my fixed assets. I've summarized all the components, all the assertions, and then of course, I've got my reference to work. Why have we given two different outlooks? Well, in a lot of instances, you might be at the client and you're using a laptop screen and you would just like some more screen time. So this just enables you to utilize it for that perspective as well. You want a reference to your work, please note you can insert your hyperlinks, and I think only 3 columns are activated. So you can use up to 3 if you want to collectively hyperlink to a whole lot of documents. Link to 1 where all the links are. We don't extend beyond 3. Okay. Now, before we continue with my execution and my conclusion here, of course, what happens when you're doing execution? Well, I have all my procedures over here that I need to go and actually test. Great. Now, I want to pull in all the work that I've done. So I'm just going to jump to a other file to pull in some extra work. So here we are focusing on electronic reviews as well as importing documents. So I have a few tips when it comes to that. Okay. Now, if, for example, I want to pull in working papers into a respective section, and I've set up my working papers in such a way that I've already given them numbers. Okay, so you'll see there, my engagement letter says 1031, fixed assets 3010, bank confirmation is 3620. Okay, why have I given them a prefix? Well, if they have the prefix, they're able to go into the relevant folder and I can access them there. Now, instead of using Office tools and importing one file at a time, I can do a bulk import by doing the following. So I hold in Control and I select the respective documents. I can then drag and drop into working papers. Okay, so now I'll see there's my 1031. Where was my 30.10? And I think with my bank, cash 3620. So I was able to import the documents that way. However, and I know we have a whole lot of, what would you say, working papers we want to pull in, okay? And I don't quite know which numbers I want to do because I want to make sure I don't duplicate a number by accident or anything like that. So there's another way you can do this using your electronic review, but importing documents. So I've got receivables and revenue. So we're going to go down to our revenue section. Okay, so I find where I want to kind of include it in my electronic review. Let's go. Okay, there we go. We've got revenue and receivable cycle. Okay, you can see I've got all my not applicables. I'd actually like to not see my not applicables. So again, I can deactivate the eye and hide all the not applicables. Just gives me a little bit of a know what to focus on. Okay, so here we go. Revenue and receivable cycle. I want to import those documents, but I'd like them to, be sequential. And I don't want to have to rename them or make sure I'm doing any duplicates or anything to that nature. Okay, so here I go and I select my documents. Okay, and I'm going to drag and I'm going to drop, but I'm going to hover it on the number I want it to follow. So I would like it to go 35.21.22. So you can see I'm hovering on 3520, drop it. And now I have 3521, 3522. I didn't have to rename or go through, because I know in a lot of instances there are sometimes multiple supporting documents that one wants to include. Okay, now from an electronic review point of view, okay, we have incorporated something new recently from a journal entries perspective. So if you've seen the e-review and you wonder what it is, it's just basically an option to go and review or mark certain journals as prepared, manager reviewed, partner reviewed. Okay, so on my electronic review, you'll see under adjustments, it's telling me my journals. Okay, I can see that Nicole has prepared that one. So I would then be able to go to journal entries, click on the e-review, and then log in as partner or manager and mark it as reviewed. So I'll do it for the second one. I'm going to go and say, I have prepared that journal. When I do, it updates to my electronic review that said journal has been done. Now, as a note, you can also add review notes on your journals or your trial balances as follows. Okay, so we'll go and add an audit journal here for audit 2. So I click on the grouping, the little plus or minus, and I can then go and add a review note here. Okay, I can assign it to an individual and I can press enter to action it. I now have an open note. Said individual would need to come to the note. Okay, we can see that I have an open note. I would then be able to address it or comment. And I now go and indicate that this has been actioned. All right. Now you'll see it still indicates that it's an open note. So if I am a clerk and I'm wanting to say, well, let's close this note, it's done and dusted, I need to either be a manager or a partner to do so. All right. So of course, log in. And then I would go and say, okay, noted. And then I would mark it as closed. Okay. Now, in case you wanted to see the list of notes raised, so there's a way you can filter. You can either do a notes filter, notes by or to an individual, incomplete notes. You can filter however you want to. However, under client setup, please note you can also view all client notes, their status. And of course, I've got one other one. Let's just go to electronic review. There's an export notes option. You can export it to Excel. It'll give you the following report. Okay, so there I can see all my notes. Great. Okay, let me just open my electronic review. Okay. Included in my electronic review one, I do have a sample working paper that I'm just going to discuss. Okay, and then we almost finished, guys. It's just the conclusion part. So you're sampling working papers. Okay, if mine decides to respond. Sorry, it's a bit of a large one. So how do I pull in sample working papers? Well, in working papers, you have an option to choose auto sampling other. Okay, that's for maybe Xeros or QuickBooks, or I've got auto sampling pastel. I choose the population size and then I give it a designated name. So I did cost of sales sample. I document the component that said sample will be affected. Obviously, it identifies where it goes. Okay. In terms of your sample size calculation, a few things to note. Yes, I need to go and indicate, which of these assertions will be addressed by a set test. Okay, you can see my materiality is pulling through from my 1010 materiality working paper. I then go and obviously select the applicable level of risk to be addressed by said test. Okay, now depending on obviously whatever was identified in your plannings, this could differ. Remember, this does affect your sample size. Okay. The total population amount to be sampled, how does it get to that value? Well, when you're using your pastel, okay, you'd obviously go and you would select your general ledger, come and paste as values over here. All right. Now, the samples, well, the total population to be sampled, the 17 million that I have there, that is your absolute value, meaning it's adding all my debits and all my credits together. Okay, so this is an absolute value population. Of course, the total population value per the lead schedule comes from your population check. Okay, so you can see I've only included the first 3 in my sample, and it gives me 15,967,304, which should agree to my financial statements. You'll even see we have a match here. No opening. Why is this no? Well, according to the general ledger I pasted in, my population was 6.2 versus 5.3 on my trial balance. What would that indicate to me? There's a potential discrepancy between the trial balance and the general ledger. So, of course, one needs to take that into consideration. Where possible, okay, once you've indicated whether you intend to include that GL in your sample, it'll indicate that it is sampleable. You can go over and above and maybe select certain items as key items, okay? When I indicate something as a key item, it'll take it out of my remaining population because I'm going to go and specifically test this. If something is material in nature, it'll indicate as such, and it goes and it breaks it down on my sampling. So you'll see it's identified one main transaction that was above materiality. There's my 3 key items. Now I've got a remaining population of 689. Now I need to do a little bit of, using my professional skepticism here. So I need to choose a random decimal. I can even go and type in 0.xyz, or I can do equals rand, open and close bracket, press enter. Copy, okay, and you want to paste values, okay. This just gives us a random decimal to determine our sample from. Of course, there are a few other questions I need to consider. Has the entity had an audit qualification in the last 5 years? Yes or no? Is the overall control environment effective? So remember that whole control environment plays a role in your sample sizes too. So yes, it was overall effective. Okay. There, I get a suggested maximum sample size. Okay. Obviously, if my firm methodology is different, I can go and indicate as such. However, now I can go and determine what is my sample size. Oh, it's determined 40. I can use 40 or I can use 42. Depends on what I'm intending to test. When I do, you can go and add procedure details if you would like. Okay, these will pull through to your sample testing. There's my A. Now, what do I have? I have my material transactions. I have my key items. I didn't have to go and copy and paste from the GLs, so it's done that for me. It's pulled it through, and it's gone and it's identified my 40 transactions. From here, I can obviously set up procedures to address the assertions and the testing. I can then go and put in any error values. Obviously, is it systematic, isolated for extrapolation? Was it a disagreement? Was it a limitation? And complete the working paper in that respect. Okay, so that is our sampling that you are able to add. Okay, now, of course, we've done our execution, we've done our sampling, we've pulled in our working papers. Now we actually need to finalize our execution and our conclusions. So if I look at my fixed assets, I can see I've got yellow blocks, meaning I need to go and test or indicate whether or not the test was successful. Yes. Okay. So of course I go indicate yeses, nos, whatever the case may be. I can use the quick shortcut to initial and date. And I'm going to go through all these questions. So obviously I wouldn't phantom tick and say, yes, it's done. I need to support that it was done and I got to said conclusion. Okay. Now, hypothetically speaking, my control, I've indicated no. We're going to see what happens when I do that. Okay, so all my other tests were super successful. Again, obviously just making sure you don't have typos. Okay, when I do that, you can see my conclusion starts automating and populating up. Yeah, so let's have a look. Test of control. What's it telling me? It says the desired level of assurance for test of control has not been achieved. Please increase your level of testing. So it's telling me I still require an additional 1. However, substantive, great. Your objective was achieved, as was your tested detail. So a tip when you're kind of looking at your audit programs and you see yellows, let's break it down. If I see yellows here, but it says that my planning is adequate, but the execution does not address all risks, it's possibly indicating I've indicated that a test was not successful, or I haven't addressed that a test was successful or not. Okay, so yeah, I have indicated that this was not a successful test. If I look at change in audit approach, you will see that because I indicated it wasn't acceptable, it's now activated that I may need to consider a change in my audit approach. So what procedure or strategy am I setting up? What risk level will be addressed? And how is this going to affect our audit report? We realize it was a sleight of hand. This was correct, obviously, because my reviewer went and actually did a note here and they were like, Nicole, this was a yes. Okay. And then, of course, they can address it to me. And I'd be like, oh, dear, go correct it. Okay. When I do, that would help if I did indicate that it was a yes. Okay. When I do, okay, you'll now see achieved, achieved, achieved. No longer have a change in audit approach. Why? All our tests were successful. Okay. So, of course, I go and I conclude on all of these. I say, yes, that's fine. Applicable audit procedures were designed. Yes, my execution was great. The reviewer has signed off. Number of material journals. Okay. Would help on my keyboard. Now, obviously, instances of non-compliance or suspected non-compliance, if you have identified, you do go address in 330. And if you identify any fraud, you know you need to go and address it. Okay, so I'm going to mark as prepared. We're happy. Now let's look at another working paper. So remember when 1605 was indicating everything was threes? Just want to find the right working paper. You might end up with something like this. Okay, so I'm in my execution. I have a whole lot of yellows here. Now, there's my significant risks. They have pulled through, okay, to my working paper accordingly. But how or why do I have yellows here? So let's have a look. When I see, and I'm in execution mode, that it says planning of the audit program does not comply with the audit plan, that is an indication that A, I may have populated the programs with, I don't know, all the assurance being threes, okay? Meaning now I haven't selected enough procedures to address the assurance, or again, I haven't selected enough procedures to address any assurance or something to that effect. So how do I correct this? Again, we go back to your planning. Yeah, we would indicate that no, I need to go back and correct this. And you would see that it would be indicated by red cells somewhere. So again, when one is seeing that the planning is showing up as yellows, I know I need to go back to my planning mode and either select additional procedures to address the risks so that it shows me that the planning complies with my audit plan. Of course, execution hasn't addressed all risks because we actually haven't selected any procedures to address the risks. Lastly, looking at your finalization, and this again is the last and most important document for your audit partners because they run their eye through this. So this is the final checklist, okay? It goes and it says to me, all right, 10, you accepted the document. Do you confirm? Great. Audit firm's independence. We're about to sign off our audit and we still have not signed off a certain document or addressed all the incomplete questions. This is my final chance to correct it before signing off my audit and potentially facing a finding with a regulatory board. Okay, so of course, at the end of the day, I would like these to be a positive result from a document or something I can explain, preferably positive. I try not to want to have to over-explain things. Again, all your working programs at the bottom here, your conclusions will pull through. We'll show you whether the execution was completed adequately, whether there was a change in audit approach, and what your sign-off was. And these would all be considered before signing off your audit at the final stage. Okay, I think that brings me to the end of our audit introduction. Hopefully, there has been a little bit of an insight. Apologies if this has been a bit of a repeat, but it is just kind of an introduction to our workflow that we do follow. Awesome. And thank you so much for everyone's time. And up today, I know August is a trying month. There's a lot of deadlines, especially for the audit world. So thank you for your guys' time. Without you guys, we wouldn't have audit programs to show off.